Hey guys, welcome back to Two Realtors, One Mic. I'm Audrey, Hearst real estate agent.
And I'm Remi Desbiens, real estate agent in the Kapuskasing area.
Today, we're receiving a very special guest on the podcast, Joel Lamarche from Smart Debt Mortgages. Joelle will talk to you today about down payment options, getting approved for a mortgage, how to improve your credit score, and more.
Yeah, so first off, one thing that'll be great today is we're going to have Joel Lamarche, a mortgage broker. Before getting into that, I would like to congratulate our director, Julien Boucher, and his lovely girlfriend, Chelsea, for bringing in a baby boy in this world, Samuel. So Julien, Chelsea, congratulations for your newborn son.
Congratulations, Julie.
Congratulations.
So as you can see across from me, we have Joel Lamarche today. That's our special guest. He's actually our first special guest on the podcast. Thanks, Joel. Thanks for joining us. And we're going to really get into the nitty-gritty stuff about, wanting to, if you want to get a mortgage in place, how to go about it. And that's why we brought the expertise of Joel to help us out. Now, before getting into all of that, it's been actually a few months since we've done our last podcast. So we just wanted to kind of like catch up on our summers and all that. And after that, we'll really get into Joel, his backstory. But yeah, Audrey, you want to start with how your summer was?
Well, I got engaged.
Oh,
Gotta say that.
another congratulations.
Thank you. And then I've been working mostly behind the scenes. It's been a slow summer in Hearst, but I've been working on my marketing and just systems, trying to put in place some type of organization to make my life a little easier when it does to start to get busy again.
That's all you did?
That's basically all I did.
Oh.
I went on a few trips, went to London, saw some of my friends, and then went to Toronto, which we'll talk about later, and then going back to London. That's about it.
Yeah.
How about you?
Oh, geez, very busy. Well, this summer is probably the summer and the longest time that I've really taken a few vacations. So it was great for that. And I was still very busy with work too. So it was, trying to do that work-life balance. But yeah, last time we did a podcast, I think I spoke about like me going to Toronto with my nephew. We were going to go to Wonderland and do the CN Tower.
Yeah.
So just want to say that we did go on the CN Tower. We went outside to walk around the CN Tower all harnessed. I am very weak. I'll tell you that.
You didn't do it?
Well, I tried to do it. So we're all harnessed up, going up the elevator. And the other thing is, if you've never went up the CN Tower, as you're going up the elevator, like you can actually see the outside. So you can see as you're going up each level. And I'll be honest, it would have been probably better for me if there was like, different stages before going to the top of going outside. Okay, you're starting at 100 meters, 200 meters, and then you kind of go to the top. It's like, nope, you're going all the way up to the top. And once we're there, I'm kind of starting to sweat and panic and everything a bit. And I'm like,
so on top of doing this was your first time up there on the CN Tower?
I had been in the CN Tower before. Okay. But it was my first time actually going outside on the harness. And even when I did it before, like to go back, I guess maybe 12 years with all the guys there, they have like that glass floor. I don't know if you guys have ever done it. They have that glass. I could never go on it because I know I'm not going to fall, but mentally my brain can't comprehend it. So we're up there and I'm starting to say, like, the girls, that's our guide, is really realizing I'm nervous. And I'm here with two 14-year-old boys, my nephew and his buddy, and they're cool as a cucumber, right? Like not an issue for them. And so she puts me in the middle. Like I'm the, 37-year-old, 300-pound adult, and I got two 14-year-old teenagers, and I'm the one that's like scared. And keep in mind, I used to be in the army and all that stuff. Doesn't matter. I'm not a macho guy, right? Like I couldn't do it. So literally, I did go outside. They opened the doors. I go outside. And as soon as I turn that first corner and I'm looking down and I can see all the buildings below, it was a rainy day too. So it was very cloudy, which was probably better for me, like visually wise. But there was a lot of wind up there. Nope, can't do it.
So you can't look down. They say not to look down. That's the first thing you get told.
The experience is to look down.
Yeah, but I look down and I'm like holding the harness there, like I'm holding the rope there, and I'm just like, oh my God. So I tell the girl, I got to turn around. And she's like, you're on the tower. I'm like, yeah, got to turn around. So we had to actually go back in the building, and then I went down the elevator.
Yeah, the wind probably didn't help though.
No.
Same as in any situation, if you're on a roof, helping a buddy do a roof or anything, as soon as there's wind, there's that discomfort that kicks in. So without that, you might have had a bit more comfort to get in there. But yeah.
And even like, so we got the videos for free because it was a rainy day. So all the extra footage that you would usually pay for, we got it for free.
So you got to see yourself being scared on camera.
Well, they didn't really they didn't show those videos. All they showed is like there's all three of us going up, and then there's only two of them coming down. Even the next day, I was like in my hotel room looking at I was looking at the footage of like my 14-year-old nephew just like, like laying back, pretending that he's, you can actually see the towers below him. And even though I'm in my hotel room, all I'm doing is looking at a picture. I was like sweating nervous just looking at the pictures. So anyway, sadly that didn't work out great for me. I don't know if I would retry it again. Also, I didn't get a refund, which is totally understandable. But it was quite the experience for that. And then later on in the summer, went to Manitoulin, went with some of our good friends of ours. That's also one of my coworkers, Michelle Moore and her husband, Colin Moore. We had a great time. Also went to Tobermory, which is you kind of grab a ferry, go across one of the Great Lakes, and then you get to Tobermory, and we went on some kayaks, saw some sunken ships, or a sunken ship, sorry, not plural. But it was a great time. And then after that, went with my cousins to see Limp Bizkit, a group that was really big in the late 90s, early 2000s, but kind of like, they've lost that fire over the years of popularity. And the one thing I wanted to say about that concert is that Limp Bizkit was phenomenally good. They were even better than what I was anticipating. And we bought those tickets, I think, in February and saw them like end of July. So it was great. But the pre-show, like all the groups before, worst I've ever seen in my life.
Garbage. The opening groups, if they were garbage or not as good, it's probably why you thought Limp Bizkit was so much better. Is the
that's what everybody was telling me. They're like, so like when Limp Bizkit goes on, they're so good, right? And a lot of people
saved the night, right?
Yeah, a lot of people told me that too. But believe it or not, so Corey Feldman was actually the first one. We got there at 6:30. Limp Bizkit was not playing till 9:30, and Corey Feldman was like okay for like, I was like, oh, I know that guy. He had like long hair and all like down to his back. And there was a few songs he played without his shirt on, which I wouldn't recommend for him, but that's what he went with. But then I'm like, okay, it's going to get better. No, it got worse as it went on. It was like, oh my God. So then I was like going out of my way to go to the beer garden, like, oh, I got to take a washroom break number 5. Like, it was just like, man, and you're always hoping that the next act is going to be better, and it just didn't happen. But then finally Limp Bizkit went on. Had a great time. It was me and 4 more of my cousins, so we were like the 5 Desbiens. We had a great time. It was awesome. And then had a family reunion on my mom's side in August. Me and Shirley went down there, had an amazing time. Reception was not really good down there, so that was a bit of an issue when you're a realtor. But overall had a great summer. So yeah, so that was my summer. So what we'll do now is we'll introduce Joelle, and also Joelle, if you all want to talk about your summer too, not just having both of us. Yeah. So Joelle, I'll let you go from here.
Yeah, my summer, a bit like both of you, went by pretty quick. As you know, I have 3 young boys, so summers pretty much revolve around activities with the kids. My youngest is now 2. So now we're able to do a little bit more because he's mobile and he's able to walk. We did a few camping trips. The first one was at Ivanhoe Lake between Folliette and Timmins. So that's one of our favorite spots. So we did a long weekend there. We did a week camping at Eno Mustango, for some people that know where that is, between Cochrane and Detour Mine. So that's usually our family reunion spot. So we did a full week there, unorganized camping. So we had a blast. The big one that we did this summer is we brought the kids to Santa's Village. So we ended up hauling the travel trailer all the way down there. I think it's close to Bracebridge, if I remember correctly. So that was exciting. I'd recommend anybody with young kids to take that trip. Lots of fun. But other than that, yeah, it's been my first year as a mortgage broker. So first summer. So it's just been work, trying to get some traction.
So Joel, what would actually make you want to go in the direction to become a mortgage broker? Like, what's your background on that? Like, that brought you to decide to do that transition into that type of work?
Yeah, well, a bit. I could give you a bit of my background on how I got to where I am today. I was born and raised in Timmins, Ontario. For some of you that know me, family's all from Cochrane. The Lamarche engineers from Cochrane. I did my school in Ottawa, so I did a bachelor in commerce with a specialization in finance. So numbers is what I've been doing since I guess 2008. After my university, I ended up working as an accountant for CRA. So I worked as an accountant for 2.5 years with Canada Revenue.
So you're the guy that audited everyone else.
Yeah, no, we were working on the balance sheet. So I was in the payroll department. So the numbers that CRA, believe it or not, is the only ministry in Canada, like the different departments that need to produce balance sheets and show where their money is actually spent, believe it or not. Our governments run in just budgets, and here's your budgets, and everybody gets to spend their way. Canada Revenue Agency needs to actually report where the money is spent. So working on the balance sheets, so need to produce some financial statements and balance sheets. So we were in charge of all the salaries. So at the time that I was working there, we had 46,000 employees. That's here. I think they're more than double that now. But anyways, at the age of 21, I decided to make a change out of there. Accounting was not for me. Not exciting. Well, depends. It's not for everybody. It wasn't exciting enough for me. I went more in my roots to go work in finance. So I became a financial advisor. So did my licenses, my courses. Ended up working as a financial advisor from late 2011 up to this year when I made the change. So I was a financial advisor for 12 years in total. The reason I went into the mortgage world, to get back to your original question, is I was looking for a change after 12 years. I'd gotten to where I wanted to be. I reached the top. I had become a CFP professional, so I had my credential as a CFP, which only 3% of the industry actually managed to attain. So I got to a point to where I wanted to be. And one of my old colleagues from back in the days when I worked in Ottawa, Cam Wong, always told me, if ever you're doing a career change, he was a former pharmacist and he had become a financial advisor. And he had mentioned to me, if ever you're doing a career change, go out when you're on top, because that's when you have opportunities, that's when you have choices, that's when you have flexibility. So being where I was as a financial advisor in the last few years, which is probably fresh on everybody's mind, we went through COVID in 2020. Market crash, some of the investors that might be listening in. Market has been crazy ups and downs. Like since then we had four major drops of almost 20% in like a month's time. So stress level, ups and downs. It's been a crazy roller coaster. And I needed a change. And my wife was starting to notice that I was getting more irritable. I guess. And she asked me one day, and says, "Are you still happy doing what you're doing?" And I kind of reflected on that and realized, no, I'm not. So had the deep conversation with her. Okay, it's time for me to change. So I considered, actually, I thought about becoming a real estate agent. Thought about going back as an accountant. Yeah, I didn't entertain that idea too long. Going back into home and auto insurance. Consider going back to school as a lawyer. That one I was leaning towards that. And then for some reason, just how the world works, you get drawn to where you're supposed to be, I guess. And on my LinkedIn feed, one of my former fellow student, one of my friends, Chris Allard, popped up on my feed, and he was doing these types of recording advertising for his mortgage brokerage business. And I know I had heard rumors that he was very, very successful in Ottawa, and he was dominating the market, and he was doing well. So I reached out and I asked him, "Hey, Chris, you mind having give me a time just to call? I want to see how things are going." So I had a call with him, and originally, he told me his progress in the last 12 years, where he started, what he did, and what he managed to achieve. And I kind of related that there was a lot of similarities what I was doing as a financial advisor into what he was doing as a mortgage broker. And essentially, it comes down to personality in your core. You're there to help people. As a financial advisor, that's what I was doing. People were coming to see me with problems, and you build solutions and put it in place, and you bring a path to, as a financial advisor, either helping people towards ownership or towards retirement or towards education for their children. And in the mortgage world, very similarly, you're helping people towards home ownership and making it happen, and not always going through it's not always easy situations. Sometimes
it's all about investing and problem solving, which was probably what you were doing in the investment world.
Exactly. And I guess this would kind of relate to what you guys are doing as well. You have to have that personality that you want to help people and find solutions and find the right home that fits for their family and looking at the needs, right? So but you need to have a certain personality. I think two traits. The first, I think you have to have a good heart and be ethical, that you want to help people. That's the first. And second, in our industries, we are not salaried employees. You have to be able to run a business. You are a business owner. So if you don't have that ingrained in you, you're not going to make it. So to go back to the conversation I was having with Chris, it was like, Joel, honestly, I don't think he knew the progress of where I was and where, like, the success I had as a financial advisor and what I had accomplished. So the conversation essentially starts like, "Joel, like, all my friends call me to see the success I'm having. They work at the government. They don't understand the work that needs to be put in place. So I told him a bit about my business as a financial advisor. I was like, okay, you understand. Like,
Yeah.
if you do this, you can make it. So then he started talking me into it. And my biggest fear was that I would not be challenged doing mortgages, because the world of financial advising, very, very complex. A lot of challenges. There's so much, not that you need to do, but I prided myself on doing and knowing and being an expert in your field. So I thought I would be bored, I guess, as a mortgage agent, mortgage broker. So I told Chris, you know what, I'll do my courses. I'll write my license, because similar to you guys, it's a very, very regulated industry. It's not just a free for all. Anybody could do this, right?
Oh, no.
Took a week off work where I did my full courses. I studied hard. I wrote my exams. And my mindset was like, once I take this course, if I choose that this would be challenging enough, then I'll pull the trigger and make the move. And I was very, very lucky to have a good teacher as a mortgage broker. Her name was Remi Desbiens. She runs a mortgage brokerage firm out of Barrie, and she was amazing. And I realized that this rabbit hole of what people see on the surface, there is so much that goes down in the background, and it's and I immediately got hooked. And even when I was doing the course, my wife's like mentioned to me, like, Joel, I see that spark back in you, and I was like, okay, yeah. So the next step is similar to you guys. You could become an agent or a mortgage broker and have your license, but where are you going to work? You need a brokerage that accepts you. So again, I reached up to Chris. Like, okay, Chris, it was a couple of months later. Chris, I passed my license after a conversation. I think I want to go through with my career change into the mortgage brokerage world. And I asked him, can maybe I talk to your brokerage, your owner of your brokerage, see if they'd give me a contract to work with you guys. And he immediately told me, he's like, no, it's not going to happen. And I asked him, why? Why not? And he explained to me that his brokerage in Ottawa, there are 15 high-performing brokers that ended up coming together and forming their brokerage because I guess to say it like it, they were fed up of all the BS of other brokerages and having one person try to run the things. So essentially, it's 15 high-performing brokers, the best of the best in Ottawa, got together and made their brokerages. And the owner is called Debbie Belair. And I told him, oh, okay, well, you mind just giving me your phone number? And it says, on Joelle, like, she gets calls every week of brokers trying to work with us. And it's an immediate no. So he says, let me put in a good word for her to actually take your call and give you time of day. And then we'll take it from there. So he ended up giving me her phone number. I reached out. She was away, I believe, in Greece at the time. So it took a few weeks. And she entertained the call. And immediately, exactly like Chris had said, when she took the call, she said, okay, out of respect for Chris, blah, blah, I'm taking this call. And within 5 minutes, she had expressed that she was not looking to expand her brokerage, and she wasn't taking on anybody. So it was pretty much a no right off the bat. So I was a little bit disappointed because knowing what Chris was doing and how he was working and his structure is something similar that I wanted for myself. So the conversation, and the reason I share this, because this was one of my biggest wins as a salesperson, but I wasn't trying to sell. And the conversation kind of went in a different way, in the sense that I kind of pivoted point after I got the solid no, and expressed, okay, well, I'm having this conversation with you. You're the first brokerage I approach to get a contract to start working as a mortgage broker. If I would be contacting another one after you, this is what I have prepared. This is why I think I'm a good candidate. And I kind of laid down my plan of transition, because prior to these calls, there was some preparation that I had done. And I asked her maybe to criticize and see if there's any points of amélioration, like points of improvements that I could put together, presenting to another brokerage. Because brokerages is similar to you guys, I guess. Anytime you do a mortgage or real estate transactions, your brokerage is paid a commission, and then you get your split as well to facilitate the transaction. Same thing in our industry. And depending on your brokerages, you want to negotiate a bigger split for yourself, or different types of arrangements, or training, support, IT, marketing, and so on. And Smart Debt Mortgages has a very, very good structure. So I asked her to help me to prepare for my next call. So she kind of, I guess I could hear in her voice, she went from a kind of like, oh no, I'm taking this call just as a favor, to like, oh, I'm excited about this. So after about half an hour in the conversation, she was really into it and listening to my business plan and why I thought a mortgage broker was a good fit for the Northern Ontario market, because I am the first one in the Northern Ontario corridor, other than a few. And then she kind of pivots like, Joel, she said, I haven't been this excited since I started becoming a mortgage broker. You are bringing back some excitement in me. Let's do it. And I'm like, what do you mean? It's like, I'm taking you on.
Oh,
Let's go.
geez.
Yeah. So I was like, oh, right on. So that was a huge win for me. And then, yeah, so let's say we ended a call there, and then we had a different discussion about how we were going to structure the training. Because like she had mentioned to me, and I just said, they were all high performing brokers that got together. So it wasn't in her habit to take on somebody by the hand, because there's still lots to learn, and fully train from A to Z. So that was something that she was gonna, put together and see how we could structure everything. And as a brokerage, similar to you guys, when you start, they have a legal obligation to ensure that all transactions go correctly.
Yeah.
So she has her hand directly on all my mortgage files for 1 full year minimum. Like, she has to have her nose open in it and make sure. But anyways, just to go back to the story of how I answered a long answer to your question. Why did you get into mortgage brokerage? Essentially needed a career change, and then everything fell into place. And it seems like, yeah, if your heart is there to help people, the world will line up in a certain way that you'll achieve what you want to, and be in the right place. And that's truly where I feel right now, especially after 8 months of operation. The amount of people I'm able to help, the difference I'm feeling I'm making. I'm very, very lucky that I chose the path that I'm down, because I'm very happy, and it's fulfilling work. So, yeah.
I even remember when you were starting to talk to me about like doing the transition to being
Yeah,
a
you were
mortgage
one of the
broker.
first I told. Yeah,
Yeah,
but I wasn't sure. Yeah.
Yeah. We had some great conversations, but at the same time, for me, I found it was, if you were going to do a transition, I felt it was the right transition for you, understanding the background that you already had, the people skills, the skill sets that you had, just was a perfect blend for you to do that transition. But yeah, it was, and the other thing too that's great now is, for example, I never, for myself personally in Kapuskasing, I never had a mortgage broker to work with. And now that Joelle is doing that, it's also for my clients, as for the buyers that I have, or even sellers that need to buy something else or remortgage, whatever their options they need to do. It's good to not just have, local banks and all that, but we also have a local mortgage broker that can also help facilitate or provide further options. Like you mentioned, you are in your first year.
Yep.
But at the same time, I wouldn't say that you're very green, like you have other experiences, especially specifically to the financial background, where it's just a smooth transition. And from what I've seen and what I've dealt with you already, it feels that you actually have way more experience than you, like years wise, than you actually do, which is fantastic.
And again, to go back to where I think I struck, it was part of my business plan, but I identified that there was a hole in the market. So coming in, opening here, I didn't have much competition in the sense that I became busy very, very, very quickly. And we talked about my summer. Essentially, I worked all summer. It was just mine. Like when I started, my schedule was 7 a.m. to 1 or 2 a.m. like every day. And to go to where you're saying, experience-wise, I get told that now by Debbie. Like, she does have her hand on everything, but she mentions that I have more experience and know-how that some of our brokers have had for 5, 6, 7 years. And it's for the fact, I think, that I'm touching a lot of files and complex files. The financial situations of Northern Ontarians are so complex. The amount of when I started here as a mortgage broker, like our head office or underwriters, say, because I have contracts with Scotiabank, TD, BMO, Desjardins, MCAP, RF. Anyways, I have over 50 lenders. I have approximately 20 that deal here in Kapuskasing or Northern Ontario. And the amount of times that I send, because I need to go through all clients' financial assets, liability, and so on. When I present a mortgage file to the lender, my underwriters, their head office is in Toronto, Montreal, Ottawa. And they look at this and it's like, what is going on here? And the complexity of the financial situations here. And then the comments I started getting from my underwriters, they just say, yeah, only in Northern Ontario we see it. So, yeah, a lot of complex cases that I've been working on. So learning how the system works.
Yeah, I talked about this with a few agents here. The biggest issue for people to get into home ownership is the lifestyle in Northern Ontario, and that's probably what you're referring to. Is
Exactly. Yeah.
a lot of them have that most people don't when they're trying to buy a home, to where they have a skidoo, a quad, and that's okay. I understand. It's our way of life. You want to enjoy.
Priorities are very different.
Yeah, you want to enjoy the nature, and that's okay. It's just a big challenge
That's
that
why we're
I
here.
see in my market for home ownership. People are saying, "Oh, I can't buy a house," but it's more complicated than.
And what people realize, like we all live here in Northern Ontario because we love the lifestyle. We like the toys. We like the snowmobiles, the skidoos, the cottages. It's people think it's cheaper to live up north. No, it is not. It is so much more expensive.
The houses are cheaper. The lifestyle is more expensive.
But if people only switch things around in the sense like prioritize, buy your house first, then get all the toys. It's easier that way. And there's a few reasons why. When you're buying a house, there's so much more things that are checked. Like your income has to be proved. It's very, very strict in a sense. If you're buying toys, they don't care. They'll write anything on the paper, and they'll finance you for that toy, and it'll go through.
Yeah.
They don't look at your debt ratios as like, because we have regulators like the government. We have obligations to follow these rules, and we can't break them, or else we lose our license or we get fined. So
it's for their benefit. We're not doing that to hurt them. It's because we
no,
want them to live.
Yeah, absolutely. So there's nothing wrong with all the toys. Like, I have them all. Like we all have them all. But it's prioritize your house first, especially young people. And that's one of the key points that I could maybe not stress, but put some emphasis on it, especially young adults when they first get their job, their real job. And it doesn't need to be a big job, but say even just like 50 grand a year, 55 grand a year. And the first thing they do, and I see it every time.
I know exactly where you're going with this.
And there's, it's okay. Nothing, like, everybody deserves something nice. I'm not knocking that down whatsoever. But the first thing they do is they go buy a new truck. Because you need a truck in Northern Ontario, that's fine. But they buy a new truck, and sometimes maybe they go a little bit overboard because it's excitement. It's fun. You finally have money.
Yeah.
And then I see the quads coming in, the Sea-Doos, and that just piles up, and the boats. But as soon as you do that, you are not getting into a home.
No, it's also a thing of generations, because if you look at our parents, our grandparents, they worked and they were saving every penny they had to get a house. And then when the house was paid off, we can buy a new car.
Yep.
We can buy a quad. As to now, kids are staying to maybe more stay with their parents, which is fine.
Yep.
But then they have adult money. And then adult money, they're like, I have too much money. What am I going to do with it? And then they're buying other stuff. So it's hard to get into home ownership. It takes sacrifices to where sometimes you won't have the lifestyle that you want, but yeah, we have to emphasize that to them.
To try to help you guys out here a bit, and I'll speak to your viewers. Home ownership is not hard in Northern Ontario. It's affordable and it's easy. And I ran a few numbers just in preparation here because I knew it was going to come up as a conversation. But say, as a starter home, would you say a $250,000 home here in Kapuskasing would be reasonable?
Yeah, our average price is around $260,000.
that's the market for average.
You don't get I gotta say not a bad word, but a really bad house for $250,000. You get something very, very decent.
Very pretty house for $260,000.
And I would never recommend anybody to get into homeownership if you're not ready. Like, don't get me wrong, if you're not ready. Oftentimes you need to have that stability, maybe a girlfriend or whatever. You need to have there's nothing wrong with renting or living at home if you're not ready for home. But if you are ready, don't let money be an option. And to run you a few numbers, if you buy a $250,000 house, your biweekly payments are $620 biweekly.
Yeah.
So about $1,300 a month.
Not even.
Which is the same price as rent.
But think of your paycheck, what's coming in. Yeah. $620. So your truck payment's more than that biweekly.
Yeah.
Yes.
It's like, prioritize your house first. Once you have that, the dealerships of toys and trucks, they'll make it happen. You'll get your toy. Get your house first.
Yeah.
And then the other thing, I like to mention is the down payment. How do you come up with that? On a $250,000 home, you need minimum 5% down to get approved. To get approved, and it needs to go through CMH. I could get into that later if you guys want. But $12,500. People say, that's hard. That's hard to pick up. $12,500 is not hard to put aside. It's just prioritizing. Again, I'm a numbers guy, and maybe my financial advisor background kicks in a little bit here. But there's different ways of doing it. And we'll talk about other programs that the government put in place after, but just basic saving.
And is that, so if someone says, for you it might be easy to get the down payment, but I can't do it easily. So can someone go to you say, I want to get into home ownership. Can you help me out with getting the down payment figured out?
Yeah. I will line you up with a financial advisor. I'll tell you exactly what you need to do. And just to break down the numbers, if you need, say, a $10,000, like maybe you have a couple grand already, you need $10,000 extra. That's $30 a day. Can you save $30 a day? Yeah, most likely. You could look at your schedule, what you're spending on, say coffee's lunch, just habits. Pack your lunch. Make your coffee at work if there's a Keurig instead of going to Tim's or McDonald's. Just habits. $30 a day, easy. That's $190 weekly, or on a bi-weekly if you want to save it off your pay, $384 every pay. Not that hard. Automate it. Take it off your paycheck, like the day after your paycheck. Automate it, so boom, it goes into a savings or investments or different types of account that we could get into.
We can get into it right now while they're in the subject. Maybe we can talk about the few accounts that they have as options for their down payment.
Yeah. So for down payments, there's a few ways of doing it. There's just basic savings that some people do. The more often that I see the specialized account that will really give somebody an advantage is if they work with a financial advisor. And I, as a former financial advisor, I recommend everybody to work with an advisor, even if it's the one at your bank or Sun Life or IG where I used to work. Get somebody that's competent, that you trust, that could give you proper advice, because it does make a huge difference. So to get into home ownership, the one I see more often, I'll start in orders of the ones I see more. There's the home buyers plan that goes through your RSP. So first time home buyers plan through the RSP plan. The one I see that more often, the reason I see that one more often is that a lot of employers give RSPs.
Yep.
Yes.
Okay? Not all, so I can't speak, but most of the plans that employers will give you will allow you to use the first time home buyers plan to do a redemption from your work RSPs. So that's an easy one. You've been working at the same place for a couple of years. For sure, you have 10, 15, 20 grand in that account. If, say, you matched it or like it goes up pretty quick. Like employers typically give on a plan from 4 to 6%. If you match that, that's 12% of your salary per year. If you're making 70 grand, we'll say, you got, quick math, you got 70 grand invested per year. That's
go on 100 grand. It'll be easier to.
Yeah, 100 grand. Yeah, but no, but those jobs oftentimes matching RSPs. Anyway, I'm using first time home buyers, younger kids, right?
Yeah.
Numbers. But it adds up. Have that invested. You easily have a 15 grand under a couple of years, and that's usually a time that you're ready to buy. So that's one source that I see quite often. And again, there's a lot of specifics and details that you need to know. It's not complicated. It's straightforward. But that's why I recommend talk to a financial advisor. Make sure it's you understand the repayment and how that works.
And just to go off what you're saying, right?
Yep.
Like what you're doing right now is you're giving a really great recommendation, because obviously if you're a first time home buyer, you don't have the experience, you don't have the knowledge and all that. So what you're giving them right now is really good information on, like, look, you're not an expert. Go see a financial advisor. They're the expert. Want to get a mortgage? Go see a mortgage broker. Need to really have information on the housing?
Yep.
Go see the expert. Go talk to a realtor,
Yeah.
right?
Yep.
You need legal advice? Go see a lawyer.
I hear this so often to people say, "Oh, well, I don't know anything. I'm sorry." And I'm like, "No,
Help is there.
we
Just
have a
reach out.
job
Yep.
for that reason.
Yep.
Is we're here to
Yep.
help you. So ask for help. And if maybe you say, "Oh, I want to get into a house," and then you call Remi, I don't have a down payment, and then Remi can say, "Hey, call Joel," or we have a basis of people, and we're here to help you.
I'll let you go back to your point.
Yeah,
sir.
I'll go a little quicker on it, just to do an overview. So if people are listening, if it applies to them, at least there's some content information that they could use specifics. So the home buyers plan through RSPs, they're all to pull 60 grand out of there. So plenty enough if you got the RSPs to buy pretty much any down, and even in some situation even avoid CMHC if you could take out enough out of there. You got to repay that into your RSP within 50 years. So you take it out tax free, like without paying tax, and then you have to put it back, because the concept of RSPs is it's a tax break, but it's meant for retirement. You need to put it back. Okay. The second big one is the new program, the first home savings account. That one's new. It's even better in the sense that. Again, talk to your financial advisor on there. There's some difference in taxation, but you're allowed to put $8,000 a year into that plan to build it up. You get a tax break on your taxes, so it's a tax deduction, which is huge. So on 70 grand, like we're saying, you're hitting the 40 tax. So you put 8 grand on there. So you got 8 grand in there. You're getting about 3 grand back in taxes. So it's
a lot of money.
Put 8 grand in there, and you got about $11,000 down. Anyway, just playing with numbers. The reason that one is very, 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 very good, and the government's really encouraging or trying to help younger people get into the housing market, is that one, if you take it out, it is tax free. So you're getting a tax break, and if you pull it out, you're getting it tax free. So it's really not a tax loophole, but in a sense avoiding tax.
But you got pulling it out, but you got to pull it out for buying a house, right?
For buying a house,
So,
it has to be qualified for a house.
It can only
if not,
be
you cancel
used
it.
for a house, right? If I'm correct, but it's the same principle as a tax-free savings account. It's the
Yep.
same benefits,
Yeah.
just So instead of saving 8,000 only in your tax-free savings account, you'd be saving $16,000 per year tax-free if you use the tax-free savings account in the first time home savings
Yeah,
account.
I could go into again. This is more in the line of as a financial advisor. I am an expert as a financial advisor. I still hold my CFP credentials and all that, but I want to speak more as a mortgage broker's professional. But to talk about taxation on that side, the main difference is because I'll point out the three, because there was, and you brought up a good point. TFSA is a great vehicle for saving as well, and to use towards buying a house. So through RSPs, whatever you put in, you get a tax refund. If you take it out to buy your house, you have to put it back in, or you'll pay taxes on it. The first home savings plan, you put it in, you get a tax break. You take it out, you pay zero taxes. So that is by far the best one to buy a house. TFSA, you put it in, you get zero tax break. You take it out, you pay zero taxes. So the best one would be the first home savings plan by far. Second one would be the RSP program if it's in there. And then the second one, TFSA. The reason I see more, to go back to where I was saying, the reason I see more the RSP side is I crunched numbers how easy it is to actually save money to buy a house when I first got on this topic. But it takes discipline. It takes behavior. And oftentimes, if your salary is not there, or you have a young family, or, life, you get, and, keeping up with the Joneses, you want nice stuff. People oftentimes do not take the time to save. In the RSP plan, especially with your work plan, it's forced. Your employer's giving it, you have to match it. So it's there. So oftentimes, if you guys run into young employees, it's an easy question. Do you have a down? Oh, I'm still struggling. Do you, like, I don't know if you guys do that or have that discussion with clients that are looking to home ownership. But ask them, do you got a pension plan or RSP? You might ask your employer, look into it if that'd be available. And also, that could even qualify your clients into, if they only have the 5% down, it could qualify them into bigger homes that, yes, their income, they can afford the house, but they just don't have the down. If they have it in there, they can get into that dream home that they really want, right? So it kind of get into that. Anyways, so a little bit of specifics on that side, but definitely good vehicles to look at. And I'm fairly comfortable and familiar with the programs. Like I said, I like to refer to a financial advisor, but if anybody has questions on that,
which we respect, because you have your specialty, we all have our specialties.
Yeah, we try to all help each other and guide clients, and not try to pitch clients everywhere, but we kind of have to I, in my opinion, stay in my lane.
Well, it goes back to what you were saying earlier, is the two traits that you need to have is to be ethical, right? And have a good heart. Is if you want to help someone properly, is you have to know your limitations.
Yeah.
Right? If someone asks me, oh, is the house, what's the structure like? Well, I'm going to tell them, call the home inspector, I'm not going to put my foot in my mouth.
Yeah. If you see something obvious like a beam.
Yeah, well, if you see the house,
call.
There's also the common sense that comes in. Sometimes you look at something, it's like, that house is leaning. Don't need to be an engineer to see that.
No.
Overall, how's the conditions of the home here in Kapuskasing? Because I'm seeing
Yeah, great question. So one thing, obviously, being in smaller communities, we don't have, like, let's say, subdivisions that get built, and then you have like all this new influx of cookie-cutter houses that kind of go everywhere. And the other thing too is, because of like our housing market is lower prices, and even, obviously before COVID, the prices were even lower. It's more cost efficient to buy an existing house than build a new one. Now, those margins have kind of balanced out a bit, but having said that too, the cost of material went up also. So you're like, hey, all right, it used to cost me, like, we're talking about average price in Cap. Average price now is around $250,000. We're gonna go into those stats later, but let's say around $250,000. So you're like, all right, well, before it used to be, let's say, $150,000. So it wasn't worth building a house, because you're buying a house for $150,000, and then you can, with the money that you're putting in, it'll be way cheaper than trying to build a house for $500,000. Now, the housings went up, but also the cost of materials went up too. So there's a little bit of that. But I do find that there's been a little bit newer houses that's been built over the years that I've kind of noticed. I don't have an official stat on the numbers and all that, but we do tend to have older houses because we don't have a lot of newer houses. Like, actually, like my house that we're in right now doing this, it was built in 2000, 2001, and that's like the newest subdivision in Cap.
We don't see any more galvanized pipes or anything like that in the market.
Oh, you see it.
You'll see in some, yes, but the price will be in accordance with the state of the property.
And do you guys recommend people to buy, I guess you could say, fixer-uppers? Like, if the price is right, like,
it depends.
Is there a big market for that around here? Or?
There is a big, to me and hers, there's a big market for it, but it depends who you are, because If you're someone that can't grab a hammer and nails in the wall, don't buy a fixer upper if you're gonna have to pay someone to do everything.
Yeah.
So it has like, depends on the client and what their goals are.
Just comes to knowing your client.
And also it sometimes you will get somebody that's maybe not more into the fixer upper, but their budget only allows them to buy a certain house, but they will probably get it fixed, but it'll be like, down the road in the years. But they just need to make sure that at least the condition that they're buying it now, that they can actually operate the house.
That they can live in it and be in good conditions. And then I recommend to my clients, if it's something that's out of their budget and they want to fix it up, they have to pay someone, keep the house for longer, maybe 15 years, to make sure you're getting back on your investment and you're not selling for even or at a loss.
Because on the finance side,
Well,
there
I
is
want to say one thing though.
purchase plus
If you are gonna buy a fixer upper and you're not too experienced in those, definitely get an inspection done. If you're not getting a home inspector, get a contractor.
Always get a home inspection.
Get somebody that is very qualified to come and look. Especially if you're going to do a lot of renovations there, make sure you're getting that professional opinion.
That $500 is going to save you thousands.
Oh, yeah.
Oh, it's 500 in cap?
I don't know.
Yeah, it's about that, give or take.
I don't know. I don't know the price. I just
650 in Hearst.
Well, it's because they have to charge travel, right?
Same as appraisals in Hearst, ridiculously high compared to
how much is it? I don't know the amounts in Hearst. I don't know the amounts because I don't deal with it.
Okay, typical appraisal in Ottawa, you're running around $300, give or take.
Okay.
Here in cap, the lowest you could get them is they're $565 to $650 in cap.
Okay.
If they're in Moonbeam, Poke, there's a bit of travel. Hearst, I see them between $750 to $950. I seen one over $1,000 just for an appraisal in Hearst. Yeah, it's crazy.
Hearst is Hearst is Hearst.
Yeah.
I'm not. I can't.
But it's travel. Like me, if
travel,
somebody's hiring me to do a letter of opinion, it's going to be cheaper in cab than it's going to be in Smooth Rock.
Yeah.
Like it's what it is. Like
And again,
if the professional person
costs.
that you're hiring is not in that location, you have to pay for their travel.
What's happening in Hearst is there's few people that go there, right? Like there's few agents, there's few appraisers, so they can be more.
Supply and demand. They're the only one.
Yeah, they can charge more money because who else are they going to call, right? We have one Cochrane appraisal company that comes to Hearst, then one from Timmins. That's it. There's nobody else that's going to come to us.
Yeah, and the travel between Cochrane and Hearst, 200 kilometers each way, that's 400 kilometers. If you add, if you're charging yourself 60 cents,
it's a long way.
Somebody's got to pay for that, right? So
time and gas, man.
So to where I was going with fixer upper, the reason I bring it up, because I wasn't sure when I first arrived in town. I know there was a lot of fixer uppers, and it was worth doing because houses were extremely low priced. Now market has gone up, so I just wanted your insights on if they were viable options.
Well, and how does a mortgage work if someone's buying a fixer upper?
Yeah, well, there's always the mortgage plus improvement programs, but that's why I was asking the question. There is some limitations of ratios of how much the house value and how much they're going to loan on top of it. Because yes, you can get that extra from the mortgage because they know it's going towards a house. And there's certain ways, like steps, like you have to show invoice in which rentals you're going to do, make sure it's approved that somebody's not going to go buy a car with that purchase plus improvement because it needs to increase the property value at the end of the day. But there are some options. So I was just wondering. I haven't done one yet here in Kapuskasing, so that's why I was asking if there was the market for that, if people were looking at
the one thing that for me actually comes up very often because you're talking about old galvanized pipes. The one thing that I'm showing houses and first. It always seems to blow people's mind that that technology is still in houses, and they always think oh, I thought that was illegal. Like it's like fuse panels, electrical fuse panels. And I thought I should almost take an official stat because the thing I always end up telling people is, I'd say about 25 to 30% of my houses that I sell even today still have fuse panels, and we get home inspections done. The inspector checks them and all that, and a lot of them are still in really great condition. Doesn't mean that they all are. Like sometimes they need to be changed now. And I'm sure you're going to go into that. Sometimes there might be band-aids where regardless how good the fuse panel is, or usually it's more...
Fuses are great. That's where I was going at. They're great.
Okay.
Oh, they're great. I'll tell you why. And again, I'm not an expert on this, but most of my friends, for some reason, they all work in the electrical field. Fuses will burn out or break faster than your breaker will trip. So for the wiring of your house, it's safer to have fuses. The reason that they're not putting them in anymore is the convenience. When your fuse breaks or burns out, you got to change them. There's a cost to it.
Yeah.
Versus a panel, just flick, you put it back on. And the second danger of fuses is that oftentimes if somebody has a 15 amp fuse and they're always working more and it trips, they'll put a 20 in.
Yeah.
It's not made for a 20. You're going to burn your house, right?
Yeah.
So that's why panels are more... But fuses they're safe. Technically, if you're running the system properly, they're incredibly safe. They're the best. They're even better than than the breaker
Tell
flips.
that's an insurance company.
Yeah, the insurance company hates
They're
it.
starting to give you guys a hard time on it.
Oh, all the time.
I think it's because
I've been in the business
people are
2.5
morons.
years, and
Yeah.
I've never had an insurance company be like, "Oh, it's okay."
Or
there's
if
a
you have
fuse
aluminum
panel."
wiring, that's another one where
Yeah.
they're going to give you a lot of issues. But yeah, no, a lot of insurance company won't insure people if they have a fuse panel. And what they'll do is they'll maybe give them 30 to 60 days to update it to a breaker panel.
And
If
that's
not,
a
they will
big
not be
cost.
insured.
Yeah.
Like me, and that's what I tell people. I'm like, look, you can get insured with whoever you want. It's up to you. So, and you can update the panel and all that if that's what you so choose. So, but I still sell a lot of houses. Yeah, I'd say again, never taken an official stat, but a lot of my houses that I sell still have the fuse panels. It's just,
My house is
but it's
fuse,
surprising
yeah.
how many buyers that I bring to a house, they go in there and they're like, oh, that's illegal. I'm like, no, it's not. It's like if you were to update it like today with the new code, it'd be different. But if it was already existent in the house, yeah. So that's the one thing when you were talking about the lead pipe, I'm like, the one that really comes up is the fuse panels for me. These are great conversations, Joel. I got to be honest. There, you're a fantastic special guest.
I'm happy to be here. It's my last time I did a podcast was 7 years ago. So it's exciting. A little bit nervous before coming on. But.
Oh, you're doing fantastic.
You don't have to be nervous with me, especially with Remi. You don't have to be nervous, but me neither. He's laid back. He showed up to our conference in flip flops.
Yeah.
The amount of people that
Nice.
came up to me saying, "Is that guy wearing flip flops?" And I'm like, "Yeah, it's Remi."
He's
Dude,
approachable.
If I can be, and I did that too when I had to write at the conference. If I could be like in shorts and t-shirt 365 days a year, that's what I would do. But, in the trade, got to dress a little bit nicer, but still, yeah.
You have to have that happy medium of showing a professional image and comfort.
Yeah.
Because I used to be shirt and tie all the time. Now I'm a mortgage broker. I dress like this almost every day. Best thing ever.
Yeah. Like one thing I don't have is I don't own a suit. I don't wear suits. But
Mine
when I
don't
went
fit no more.
Yeah. And when I went to that conference too, like there's a lot of suits, right? But it's just not my style. But I think too, me being where I am at and everything, like if I don't think being in my market, and I say I might be wrong, like somebody can still dress up and have the suit and all that, but I don't think that resonates as well in our area. Yeah. But again, hey, there's, you're in Toronto, there's a lot of people that have a lot of money. They drive some nice cars, they have an expensive lifestyle. They want to deal with realtors that have that same lifestyle, right? So it's, you're catering to your market, right? So again, if I was in a market where I'd have to wear a suit, I probably would. But I'm very happy that I don't. But I always have like my little polo shirts there, like my little golf shirts and all that stuff there. That's kind of like what.
Yeah, you both look okay there.
Yeah.
You look more professional than me.
Yeah.
Well, I used to show up in suits and like very fancy outfittings, and people would be like, look at me like, what are you wearing? Like, you're way too fancy for this. And I'm like, oh, okay. Then I show up to the conference in my jeans and my blazer, and they're like, you're kind of casual. And I'm like, I can't win.
Remi, where are you? Super casual.
And then-
Come on over.
No, they said
Where's
that
the
to
flip
me.
flop guy?
They said that to me 5 minutes later. You're walking in with your flip flops, and I'm like,
Yes. Just gonna stand beside him there. Good.
And that's the thing Audrey knows about me too, right? I don't care. I'm just like, yeah, whatever. You got your suit. I'm still gonna have a beer. I'll drink out. I'll drink under the table. There's no problem.
Yeah. It's all about being yourself and somewhat fitting in with the crowd.
Yeah.
Yeah.
Oh,
Right.
where are we with this now?
I think the approval process. I think that's to be
Oh.
approved for a mortgage. Maybe just key points where people can maybe know a little bit more what it's like.
Yeah, absolutely. I could get into that because it is part of an important process of buying a house. There's two types of approvals that get done. There's pre-approvals, and then there's an actual real approval for your house, and then you get your approval and you could buy the house. The pre-approval, not that I want to discourage people from getting one. It's not worth much. Essentially, it's just somebody running. It takes 5 minutes to do. Anybody give me a call, tell me how much can I afford? I ask the question, what's your income level? How much money do you make a year? What's your debts? And then I run the ratios of how much of your income you have can go towards debts. That's essentially what it is. The general numbers is towards a house, you could have 38% of your income before taxes, like your big number, go towards a house payment, and up to 44% of your income go towards your total debts. Essentially, you just run that number and bam, you're approved for that amount. So it doesn't hold much weight. And the reason I say that it doesn't hold much weight is when you get a real approval is like you actually have to give supporting documents to support those incomes, meaning you have to have that income, not be on probation. It can't be like you got a job yesterday, I'm going to buy a house. Doesn't work like that.
Yeah.
If you got a certain income and you're making an example like overtime and bonuses all the time, okay, well, what's your base income? You gotta base it on what's your base. If you got bonuses and overtime, I could use it, but I need your 2 years average because you need to be consistently making. It can't just be a one-off year. Decide to work like crazy or in sales jobs and you're just having a hot year, right? So doing a real approval is much more. There's a lot more strain and it takes a lot more effort. And a lot of clients, if they're serious about a home, they'll do it. So that's how you guys as realtors know if you got a serious. They'll go through a real process. So go through that. Their incomes. Oftentimes they have debt they don't think about or they don't realize it's holding them back. Same as like we had that conversation about toys and trucks and all that. Sometimes, oh yeah, I had forgotten about. I got a line of credit about 20 grand when I give But when I do pre-approval or like a real approval, I'm pulling the beacon score, like your credit score. And everything is on there. So it's like going to the doctor. Like I see everything because I need to have the full process. And then the last piece. So I'll go back to to simplify my explanation because I'm going down a little rabbit hole here. A few things. The process. I need to confirm income, real income when I'm doing a real approval. Real income. Your beacon score, your credit score. So I could get into that tips because that's one of the I help a lot of people on their credit score. It's like the major weak point of Northern Ontario. So I'll get into little tips to help people out on there later. So income, credit score, your debt level, and the property you're buying needs to be approved. So that's the last piece that I can never know when I have a pre-approval because the house that you're buying, you might be pre-approved for say I don't know $450,000 to buy a house. But what are the property taxes on there? It affects how much you could afford. Is it municipal water or a well? Is it septic? It changed a lot of things in the directions in which lenders, because like I mentioned, I have over 50 lenders, 20-ish that do Northern Ontario. Not every lender likes certain types of property. So it disqualifies a lot of property. So, and then depending on the lender, they have different interest rates, and interest rates will affect how much you can afford. Anyway, so to get back to the four things that just matter for full approval processes: your income, your beacon score, your debt levels, and then the property itself needs to be approved. So those are the four things. So there is a process. When people come to see me, I go through the Bain application, the information of what's going on, and then I ask for supporting documents right away. So my application takes 15, 20 minutes. And then if they give me all the supporting documents, I know they're serious, they're going to buy something because they're ready. Even if they don't have a house yet, they come and see me. If they bring me all the documents, I know they're shopping and I'm going to get an offer from you guys coming up soon because they're getting it done. They want to know this is happening, right? So that's the process.
And I just want to add something too, because I understand what you were saying. Like for you were saying, okay, the pre-approval process is, it's for you.
Yeah.
For us, it's very
but I get to where you're saying too. Like I understand what you're saying. It's useless in the sense that, and I think we're looking at it in two different types of pre-approval. Like when we think pre-approval, we're thinking about the full approval without having the house. But
nobody could give you a full approval
understanding
without an offer.
Yeah.
But we need something from someone that knows finance.
Like for example, we don't look into their finance. Even if they go sit with you for 5 minutes, and you can, because in 5 minutes too, you can tell them, yeah, you need to like work for another year and you need to work on certain things.
Yeah,
this. Like, but let's say you're selling your house. You're the one selling your house, and I bring in a buyer, and then you're like, hey, Remi, like, well, I have buyers. They want to put in an offer. Like, okay, like, are they solid buyers? I don't know. Like. And at least if they went to a mortgage broker or somebody or financial institution that at least does like a minimum due diligence of like, actually sitting down and saying, okay, what's your job, all this, like what's your income and everything. And I know it doesn't take that much long. And I know it's not and I know like they haven't maybe done like the credit check and all that thing, but at least it gives us an idea where is it even, worth considering going forward with or not, or you might need to go through the full approval process, especially if you're on that bubble there kind of thing to figure out what you can afford.
What I'm going to do for you guys is exactly what I said. There's a pre-approval I could do. I don't need a letter, just running the numbers. And then there's 5 questions I could ask that would disqualify them from home purchases. Like, are you currently separated? You got a separation agreement? Do you owe alimony? All those things. Have you done a bankruptcy lately? Do you have your down? Like different questions that I know I have. Run the numbers in 5 minutes. Because like you mentioned, you have to be efficient with your time. You're taking time driving, showing houses to people that aren't even qualified to buy these houses. That's a waste of your time.
Oh yeah.
But on the flip side, if you're pitching those clients back to me, and I'm doing this 1-hour meeting with them, going through everything, all the documents, and it's like, okay, like this is like you're wasting my time, Mr. Client, right? So then you're pitching the waste of time on me. That said, I always do them no matter what. I'd
rather they waste your time first than mine.
But there's ways I could do it soft in 5 minutes. So in the next few weeks, I'll get in touch with both
Yeah.
of you and the other realtors, and
It's
just to know.
yeah, as
'cause-
realtors, we need something to have confidence.
Efficiency, yeah.
Like, because, and I know it's not set in stone or pre-approval. I had a client that was pre-approved. We put an offer in, he got the offer accepted, and then couldn't get the mortgage.
And
It
then
happens.
and then you're angry at the broker or the bank, like,
And
why they're not doing their job,
I wasn't
right?
angry
It's-
at him. It's just, but I talked to his broker, and then she said, "Well, I didn't know such things." And I'm like, "Okay, well, the client was not honest with you. That's fine.
Client
Like, I'm not angry at anyone. It's
Ah.
just, we know. I understand it's not set in stone. It's just, if, especially if we're talking about a 400 grand
Yep.
house, and someone's coming and they're like, "Oh, I'm a single mom and I need to see the house." Maybe you have the money. I don't know, but if you just say that to me, I'm like, "Well, I need to see something."
Well, that's fine.
And
And
I'm
know-
not discriminating.
You're qualifying your
Yeah.
buyers.
You
and
want to
that's
know
why you have a
whose
good
time
relationship
I
with a
hate the
mortgage
worst
broker.
wasting is the sellers.
Yes.
Because,
The
okay.
sellers.
Yeah, because they have
here.
to get out of their house. They have to clean the house.
No,
Absolutely,
not
yeah, yeah.
well. Not just that. You get an accepted offer.
Yes.
Okay. Yeah. The guy is like pre-approved, right? Okay. Somewhat like we didn't do the background check and all that, but all right. So bang,
Yeah.
you get the deal done. Keep in mind while that deal's in place, that house is locked down for that buyer for like around 2 weeks or whatever time links you put. So yeah, you could, but and most of the time, yes, theoretically you could put in a backup offer with another buyer, but the majority of the time when you have an accepted offer, any other buyer will look at something else. They might wait or they might go buy something else. So imagine for that 2 week period, seller has the hope. Seller is even looking at buying another property. There's a lot of emotions that go through this stuff, right? So yes, as much as we try to keep it business, like selling a house, it's not only the biggest investment you'll ever do, it's a very emotional process, especially also for the sellers. So then the seller's going through all these motions with the hope, like, yeah, like the buyer's pre-approved, talked with, either a financial institution or a mortgage broker, but pre-approved. All right, go through the process, get the phone call. It's not going to happen. And not only it's not going to happen, it would have never happened in the first place. Then you got to go back to your seller and say, yeah, they didn't get the money. Well, why the hell? Like you told me they were pre-approved. Why the hell did we even put the deal together? Now I have an accepted offer on another house, and I'm losing that house too. And then you go back to the other buyer that you want that call, but said, okay, well, we didn't see what happens. Yeah, I bought another house, but he was able to buy the other house because he had the money. So there's a lot of things in the background with that whole thing. So even though you're like, it doesn't matter, it freaking matters.
Yeah, for you guys. But to go back to where I was saying, people put emphasis on a pre-approval. Pre-approval is essentially just running your salary, running your debts, how much you can afford. Here you go. That's all it is.
Yeah.
So I understand the waste of time on your side, and this might scare you realtors a little bit. Almost half of the first-time home buyers that I'm doing, and it's just like for the reasons we mentioned earlier, the priorities of the lifestyle almost half of the first-time home buyers that I'm approving mortgages, and I mean, like, I'm working hard to make these deals work. I'm telling you, they're no's. They are not working.
Yeah.
And I have to push and ask for exceptions and build stories. And I guess I could say that's the difference between working with a mortgage broker. If you're putting under 20% down, you need to go through CMHC.
Yeah.
So even if my lenders want to say yes, the law says you need to be backed by CMHC.
Yeah.
And then there's CMHC, Sagen, and Canada Guarantee. There's 3 that do it, right? So but it's all the same thing. To be approved by them, they have their very strict criteria. And there's no ways, like, I can't do miracles. I say yes, it works. Lender says yes. CMHC comes back and says, nope, we don't like that. It's a no.
Yeah.
And why there's an advantage working with a mortgage broker is that I go back and say, okay, how could I restructure this to sell this to CMHC or Sagen or So once one of them says no, they don't change their idea. I have to go back to the other one and then restructure a little differently. Put like an explanation, like kind of a story. Okay, like so in the sense, like, okay, this young woman went through a divorce. She had some financial difficulties. Everything's coming aligned. We've been working with her for the last 6 months. She's improved her credit score from 580. She's now at 630, which is wouldn't fly. We're being conservative on this. Yes, the down payment is coming from a gift from mom, but we're proving the income that it's money's. Anyways, we got to really, really, really sell it, and then we get to the yes. But to scare you guys a little bit, yeah, I'm telling you, it's almost not all, like, the amount of deals that are right on the line that I have to push and get exceptions to get through. Unreal.
Yeah.
Unreal. So So I apologize for scaring you guys a bit on that side, because you guys want your times to be valued, but that's the reality that we're working with.
And the other thing I want to say too is, like, like, I'll talk to and sometimes I'm showing a house, like, I know they haven't went through any financial institution, but I'll talk to them like, hey, what's your job? Well, I'm a cop, I'm a nurse. I'm like, all right. And then I ask them, like, do you guys pay your bills? Like, do you guys have any credit issues? Right. I'll go through that if I know. Or somebody's like, yeah, I just started a job 2 weeks ago. That, yeah, you're not there. But the other thing too is that if at least they go sit with you for 5 minutes and you tell me they're good, I'd rather, and I know that's still not enough.
Yeah.
But it's more than coming from them, because at least I know they went to sit down with somebody that's qualified to at least kind of do some kind of a screening at minimum. So if I'm talking with you and you say, yeah, Remi, this person is not financially feasible, you know, they need to maybe kind of do something for the next few months before they can do something.
I'm going to give on that note a little bit more, because I wrote down a few tips in preparation to this podcast. Things I could add value to those first time home buyers that are coming to see you. Make sure they're approved, and how to get to that yes, because that's the main thing. Especially if you're at the mercy of CMHC or Sagen, or because as soon as you got less than 20% down, I can't do miracles. You have to get approved by these insurers like CMHC.
Yeah.
Like you have to. So a few tips that I could say on that. Well, the first thing I want to tell people is, don't wait to try to avoid CMHC, Sagen, or like that 5%. Yes, there is a premium you have to pay to be able to put 5% down, but don't think that you need that 20% down and wait that extra year or two before getting in the market. Because it's 4%. If you're putting 5% down, you have to pay 4% of the house value as a premium to be backed by CMHC. So there is a cost. 4% is significant. But why it's a good idea to buy right away at 5% rather than waiting till you have your down. Market prices on average go, like you'll probably get into that later, they rise by a lot more than 4%. So your cost of waiting out on buying a house, especially if you're ready, like emotionally, and you're ready in your life to actually buy a house, get in the market now, put your 5% down, pay that CMHC premium, and get into that home if you're ready for it. So that's the first thing I tell young people. Don't wait. If you're ready and you have that 5%, get in the market now. That's my recommendation. Because it's going to cost you more if you wait. You're going to pay more for the house. So that's the first thing I tell people. Don't wait out on it. Second thing is, your approval, CMHC, Sagen, or Canada Guarantee, like that insurer, is very, very dependent on how strong of a borrower are you. And it's easy to see now. All your banks offer it on your app. You can see your credit score. They call it like TD, Scotia has it. I don't know who else, but it's very, very easy to pull it. Your real Beacon score is it's different. It's a little bit more complex. But I'll go through, because that's a lot of the questions that I have. It's like, okay, well, some people, it's a huge surprise. Some people see me, I pay all my bills on time for sure. I got a credit score of like 800 and then it pops up and they're, under 700 or say like 680. 680 is on the line. Like it's not a great. You want to be set like over 700 to get an easy approval and get with the better lenders, better interest rates, and so on. The major part of it that people don't know is your credit utilization. So the amount of credit that you're allowed to use, how much of it are you using? Meaning, if you got a credit card for $1,000, there's a small limit, $1,000, but you pay it off every month, but you're running a balance all the time, like $700, $800, $900 like a month, which is normal. Your credit utilization, you're using 90% of your available credit. That is bad. That is hurting your credit score, and people don't know that.
That's crazy though.
Yeah, so an easy fix is,
why give it to us if we can't use it?
Yeah, but the mindset is it's very and I got some mixed feelings on that, because as a financial advisor, I worked 12 years. I've seen everybody's finances. Money is very emotional, and there's no right or wrong way to do things, but people do things differently. Some people hold a lot of debts. Some people pay everything on time. Some people don't want $30,000 of, say, credit card limit because they say, I'm going to use it. They'd rather have that. But in your advantage, have as much credit, like to give you your best Beacon score, have as much credit as you can. So any young people out here listening, go to your local bank, get the biggest line of credit they'll approve for you. You don't need to use it. It's free. It doesn't cost you anything. But it shows that you have available credit and you're responsible and not using it. It's available. It's there. You're a responsible consumer.
If you like to party, maybe don't do that though.
Same as credit card. Your limit's at 1,000. They'll offer you to bump it up to 10 grand. Take it. You don't need to max it. Don't max it. Pay your credit cards on time. But as soon as you do that, your credit utilization goes down. That is worth 35% of your credit score. The max you could have credit score is 900. So if you're maxing your credit right off the bat, you're in the 600s. So get as much credit as possible and use it responsibly. Because essentially that's what a lender, a bank, CMHC wants to see. If you've never been in the situation that you have access to all this credit, you've never been able to prove that you're responsible with credit. Are you able to pay your debt, right? So that's what you want to see. So that's the biggest tip I could give everyone out there. Get as much credit as you can and be responsible with it. Don't use it.
Yeah.
Okay. So that's the main thing. And again, pay your things on time. That's the main area on the Beacon score. The other main thing as well for first time home buyers that I like to just point out, just to help you guys as well, it's not just having your down payment. Take into account that there's some closing costs. You know, you mentioned an appraisal is likely going to be sometimes most lenders will pay the appraisal, but depends on the situation. But an inspection, yeah, it is important. Factor it in. If it's not your first time home, if it's your second home, there is going to be some land transfer taxes. You know, come and see me, or like we'll calculate it real quick, and I'll let you know what they are. There's going to be some legal costs. So you take into account that there's more to the picture than just your down, and it factors in. Can you qualify that person for the mortgage, right? Yeah. Also, something very, very, very important for everybody out there, and that's not just first time home buyers. I see a lot of people, and I'll say it like it is, not discriminating or not insulting anybody, but I'll just say it like it is. Avoid bankruptcy. Bankruptcy is not a viable option. If you go bankrupt, it is incredibly hard to get you back into homeownership. And if like it is possible, like I do have some alternative lenders, but it's going to cost you, and you will need that that 20% down to get back into home. So anybody out there, if you can avoid bankruptcy, do it at all costs. Put yourself on a payment plan. Don't take, how can I say, the easy way out of checkout. Like that's one thing, because if you have a family and you want to provide a home, avoid bankruptcy at all costs. And if you currently have a mortgage and you're getting choked up in debts and all that, but you currently have a house, come and see me. There's options that I can reconsolidate and move things around as well. But that's a major no. And I don't know if you're allowed to ask that as a realtor. Probably not. But to qualify if they've been in a bankruptcy before, very, very, very difficult to get an approval. So just since I'm here, I want to just point out a few things of advantages of working with a broker. Like I mentioned earlier, I do have over 50 lenders, 20 that serve here in the north. And if I'm doing a mortgage in North Bay or Ottawa, then I have access to my full 20. There's different categories of lenders. There's my prime lenders, so those are the best interest rates, and I'll also have my alternative lenders. So if you do come across lenders that are in particular situation, business for self-employed, that aren't paying themselves an income, or any more complex situation, I do have my alternate lenders that I could get to a yes, that they will not get to a yes if they go see their bank. So I can make stuff happen that other lender like their banks will not. So that's one of the key advantages of you guys as mortgage agents to work with me and your clients to be referred. And I always give my 100% to make it happen. A few things that I've learned over the 7 months that I've been a mortgage broker. If people are listening, I do not get beat on rate. I don't advertise my rates of what I do. But I will, if you want the lowest interest rate, I will not be beat on rates. So if you want to pay less and get a better mortgage rates, I'm your guy. That said, I do not think that should be the reason you come and see me. There's a lot more to working with a mortgage broker and advantages, finding out what type of mortgage is best for you. If you're looking to refinance, if you're the type that's looking to change homes. So, there's a lot of factors that I could add value. We're more up to date on the industry. All we do is mortgages. And one of the questions I want to address, a lot of people ask me, okay, how do you get better rates? Why do you get better rates? And a lot of people ask, like, what's the catch? Like, are you charging me fees? Like, what's going on here? No, that is not the case. As a mortgage brokers, our lenders know that we have access to my 50 lenders. Therefore, they always give us my rock bottom rates, or else they just don't get mortgages their way. So they're very competing against each other to get our business. The second reason we get better rates is that we're much more efficient. Since all we do is mortgages, when we send them a mortgage file, they know it's efficient. They know it's happening. So there's a lot of efficiencies. Like we mentioned, we all try to work together to be efficient. Efficiency. So therefore, I'm able to lock down some lower rates.
As of right now, September 26th, if somebody, let's say, were to come and, Joelle, I want to buy a house. I'm an A client. I have good. Yep. My score is 900. And I want to buy a house. 5-year term, like give or take, what do you think the rate would be for that person there? Well, sorry, 5 years, like I had a 25-year amortization kind of thing there.
Yeah. Right now, if it's perfect, like 399 to 434.
Okay.
If everything's perfect.
Yeah.
That's where I'm at right now. 399 to 434.
Which I know you haven't been in the business long. But that's a pretty normal rate, right? It's not anything too high, too low. It's pretty average, would you say?
Oh, no, that's a good rate.
Yeah, it's a good rate, right?
No, and we could talk about rates because I think that's something relevant that I don't know if it matters.
It's a big thing. People are like, oh, the rates are so high. And I'm like, No, they're not. They're normal.
And I'll say this like it is again. A lot of the Northern Ontario banks are taking advantage of people in the sense that the rates that people are getting in banks here are higher than the rates that people are getting in banks from my colleagues in Ottawa and Toronto. Okay, so the rates are fairly high. So I'm not losing on rates. Like I said, like if you want rock bottom, I got you on rates. That's not an issue. But rates wise, are they normal? Yes, but to go on rates, I don't know if people know, Bank of Canada is dropping rates significantly. A lot of people think since the Bank of Canada is dropping rates, is my mortgage, because that's a lot of things people are asking me, should I wait on locking my mortgage? Should I wait or should I? The rates I'm getting now are very similar to the rates I was getting in February when I started, because Bank of Canada rates affect variable mortgage rates. It's a direct. Fixed rates are dictated, anyways, to get in the finance, but are dictated by the bond market. Whatever bonds are going, because that's where the money's coming from for the fixed rates in different pools. Anyways, so because of that, bond market always anticipates ahead of time. They look at the economy. What's the government going to do? Like in the market, financial market, we know what the government's going to do because we know what they need to do. So because of that, the rates are reflective as of January for what's going on right now. Like the bond market moves before the government, let's just say, because we know what they're going to do. We don't wait for the government to have a change for the bond market to change. So the fixed rates have moved a bit, but not that much. I was getting 4.7s in January, and the banks were giving out 6.5 here in town. So I was killing it on rates here in town. It's unreal. But yeah, the rates are affected, and it doesn't work like people think they do. So it's a hard conversation. Sometimes people, well, why aren't my rates coming down? Like, Bank of Canada drops. It's not how it works. But yeah, without getting into detail, it's a hard one to explain to everybody that mortgage rates affect.
But and that's why too, like, cause when we're talking with my clients, the clients always ask me right now, like, if I were to buy a house right now, like, what are my rates going to be? More on the more. So that's why I kind of bring up that question.
Fair person, like normal, you could expect right now 4.6. That's common. 4.5, 4.5. That's comfortable to run numbers. Last week I rolled a lot of 4.34s. So it gives you the ballpark. And 3.99s. I'm starting to see them. So
and keep in mind too, like that's as we talked today. They're on September 26, 2024.
Yep.
So always have to keep an eye out, like how those and as we were mentioning too. They do predict as we go along that the rates are going to go lower.
One of the major advantage, and I'd say edge that I have over banks, I could call rate drops up to 10 days before closing. So if you come and see me, you got a closing 120 days, I lock in your rate at say 4.34 right now. Mortgage rates are called to, if they do go down to say 3.7, or as long as it's between 10 business days before your closing, it's part of my service. You don't have to ask. I call a rate drop I work for you, the client, and not the banks. I don't care. Like, I get paid the same. It doesn't change anything. I pride myself on my reputation of getting you the best service and the best rate. So it's part of my service 10 days before. I look at all my companies, what rate drop can I apply? And boom, I get it done. So that's something that clients have been very, very happy and referring, their family members and friends. Like, holy shoots, Joel called me, got me a better rates. And they truly feel that, I care for them in their pocket and not my lenders, right? So
that's good to know.
Yep.
So Joe, thanks again for all that insightful information there. Like I said, we've been going for probably over an hour and 20 minutes there. So this is fantastic information for all our viewers out there, and also great for people that don't know Joelle. If ever you need a mortgage broker, fantastic person to reach out to. Obviously in the Northern Corridor, but mortgage broker, you can do it from everywhere. You're in Mexico, you need a mortgage broker, call Joelle.
Yeah, and thanks to you two for having me on your platform and giving me some visibility and some content that hopefully I could use. I guess my excitement of being here and sharing my new career, you could say, pushed me to take a little bit more time. So I apologize for that. But
thank you for taking the time to come here, and thank you for educating the people listening to this or watching this. I'm sure they've learned a lot as well.
Good.
Yeah, so what we'll do now is we'll move on. And Joelle, like I said, even though maybe this portion is more of like me and Audrey, feel free to step in, say any comment you want. No problem at all.
I'm here to learn too.
It's an open table, right?
Yep.
So now moving forward, understanding we've been using a lot of great time today with our special guest, Joelle. There's a few things we're going to keep actually for the next podcast. We were going to talk about the conference that me and Audrey went to in Toronto, but we'll keep it for the next edition. A lot of great content for that one. but we'll do it for next time. So now one thing we want to talk about more is a little bit about some of our local stats that we have in our district, Hearst, Kapuskasing. So Audrey, I'll let you take it away.
I'll take the lead on the stats because Remi, I think, hasn't looked at them in the past 2 years. So I want to talk a little bit about the district. So our district covers Timmins, Cochrane, and Timiskaming. So it's a large district. And then Cochrane obviously is all the way up to Hearst. So for the year of 2024, up to date to August, because we don't have the September stats, we have a total of 829 sales, which is down 0.1% from last year. So similar markets. As far as dollar volume, a lot of money was moving. So 240,161,767. So close to 240 million. Let's just do a round number of dollar volume of sales. So a lot of money has been moved in the district.
A lot of mooners.
A lot of mooners. All the ages doing mooners at the open houses. Right now, year to date, we have about 420 active listings for the district, which is up from last year, which is to be expected. We have a little bit of a slower market. And then the average price for the district is just under 300 at 289. So 289,000 is the average sale price, which is up from last year, surprisingly.
Yeah.
With the market I've been experiencing, I was not expecting it to be up. And then median days, on market, you're looking at about 28 days on market. So about a month that properties are sitting on the market before they sell.
Yeah.
Pretty interesting. Now we're going to look at those and then look at our respective areas. So I'm going to start with Hearst. Hearst has been, and I've said it in the last podcast, I say it to everyone that I talk to basically, it's been a slow year for me. Considering I'm still pretty new to the business, I'm still getting used to the ups and downs, and I was kind of worried I was maybe doing something wrong, but when I look at these stats, I'm like, oh, it's just the market.
Yeah.
So sale activity year to date up to August, we had only 9 sales in Hearst for the residential market, which is not a lot, but it's still somewhat up from August of 2023, same stats. But it is down 30% from 2022, which was the last year of the actual COVID market, I would say. Dollar volume just in Hearst, still $2.3 million that was moved around in real estate, which is still a lot of money for the town. 24 new listings, though, which is a lot. It is up 26%. So a lot more people are putting their house on the market. And then... yeah, average sell price. Our average sell price in Hearst is actually down. So to my sellers and my future sellers, I am sorry. It went down 11% to 257,000, give or take a few pennies, for the average sell price, which is a good average if you're looking at what it was like maybe let's look at 2017. We're up 120% from 2017 pre-COVID. Still a good sell price, but we are slightly coming down from 2023.
Yeah. So what I'll do is I'll cover the Kapuskasing area. So the sales in the Kapuskasing area this year till date, so going from January 1st all the way to August now, we're at 72. So a little bit more movement in the Kapuskasing compared to the Hearst. Now, having said that too, we do know that Hearst is still grounds that you're breaking. There's still a lot of private sales without realtors happening.
Yes.
So that's another thing to take in consideration.
I'm breaking the ground with organized real estate in the Hearst market. So it is to be expected.
Yeah. So dollar volume wise, we're at about $18.5 million in the cap area. And keep in mind, these are like anything that has to do like with the residential market. So all the commercial stuff is not included in these prices. New listings, we're about 129. So active listings right now, we have 42 at that time. The big thing too is, and this is what this is the interesting part that me and Audrey were actually talking about. So for many years, Kapuskasing and Hearst were always kind of like very off on the prices. What's the average price in Cap? What's the average price in Hearst? And there was always a huge gap where Hearst was way higher. Well, if you actually look right now, so we're both at 157,000.
257.
Sorry, 257,000. Yeah, just 100 grand off, but my comment there. So sorry about that. But yeah. So actually, they're pretty much they're the same.
They're the same, which is I think I've never seen before.
Yeah.
We talked about this last time on the podcast.
Yep.
And we've heard it so much is people say Cap is cheaper than Hearst. It's not.
Yeah.
Not anymore.
Yeah. So Caps finally came up to the point where we're being a little bit more equal with all the other communities there. Because even Cochrane was higher than Cap too, especially when they had the mine open up. So they had a big boom there. So now we're kind of getting into all those brackets. The big thing though is your houses are selling faster than ours. Yours are at 29 days on the market, and we're at 43.
Which is surprising because I feel like I've had listings on the market for quite a while now. But
Yeah.
hey.
Yeah. But for stats wise, that's what we wanted to go through, and we're gonna try to also improve as we go along on stats. Is it the first time we talk about stats on the pod?
It is the first time, so if people want us to make it quicker, more in depth, let us know.
Yeah.
But yeah, we'll talk about this again because I'm excited to see how the fall impacts the market in Hearst because I feel like I'm just starting to get a little bit busier. You've been busy all year long; it's not a problem, but and I do think with Cap now has organized real estate. Like it is what it is. Like private sales are very few, if in my opinion. I can be wrong. I mean, maybe you know more, but I think organized real estate is more popular now than private sales in Kapuskasing.
I would say so, but yeah, there's still talk to a lot of people that do the private sales, but yeah, people do tend to use a lot of the real estate in the Cap area. But the other thing too, we want to do too for stats, like obviously today we're talking more about our district and our specific areas like Cap and Hearst. We are going to also down the road look at more like on a provincial level stats wise and also Canada wise, but something we just need to kind of get more as we're improving these podcasts as we're going along. So having said that, we would like to thank everybody for joining us today. I know this was a long podcast, which is why we're going to keep some content for the next one, so we have something to talk about. But again, Joelle, thanks for joining us today, and trust me, it won't be the last time that you're here. It's your first time, and it will not be the last.
Next time, I'll have my coffee after the podcast.
There you go.
Yeah.
Big thank you, Joel, again for sticking this out and then talking with us for over an hour. We're really happy you were here. Thank you to everyone that listened for over an hour because we probably have over an hour of content. And we'll see you in the next one.
Yeah, so join us next time for 2 Realtors, 1 Mic.
See you next time.